Michael Oliver, $300 to $500.
The summer.
Silver, yeah.
The summer.
Well, Bank of America says by the end of the year. And their thesis is based upon the inversion of the silver to gold ratio. And today you saw gold did nothing and silver was up 7%. Rick Roll just did it. Silver to oil, and look what happened. This guy owns silver for the right reason.
Do you think the new silver battery has anything to do with today's silver surge?
It just came out that this new startup battery company it works out to almost exactly a kilo.
Right.
I see billionaire investors, spend nearly $1 billion on silver and say he made more money buying silver than he did selling his company. Read the prospectus, pages 6 through 12, titled Risk Factors in SLV and GLD. Not only can you never take possession of the metal, but you're paying close to a 50 basis point management fee to JP Morgan and to BlackRock. You can store it physically in a BRICS facility for less money, and the storage expense is actually tax deductible.
Rafi Farber had something, and this was before the move today. Silver liquidity is probably as low as it's going to get. Speculative positions are at a minimum. Open interest remains below 100,000. Do you think the new silver battery has anything to do with today's silver surge?
It just came out that this new startup battery company is a year ahead of Toyota in their production, and there's like 100. I don't know what they call it. Cells, and each cell is like, I don't know. It works out to almost exactly a kilo.
Right. They use more though in those new batteries than they do in the current ones. So I don't necessarily think that is the driver behind.
It's just one of
today's move, right? I think it's just one piece of the puzzle, but I think that this was much more of a continuation of the momentum that we had from last week. And if you look, there was from a technical standpoint, there was a wedge pattern that had been formed, and it was the first time. Is it going to be opposite on the screen that they're seeing it?
Right.
So it was formed like this, and it was for the first time in a long time that the line had come across the end of the wedge, and that signals somewhat of a breakout. And I think that was predominantly the big part of it. But it's continuing right now, even after hours.
Which is big because normally when you see a violation of technical charting, the powers that be would want to knock it back down through it. It was, a brief violation, but a non-confirmation. To see it continue to run, the world at that level moves on technical analysis. The algorithmic black box programs for those kinds of things.
Silver just shocked the financial world. While gold barely moved, silver exploded 7% in a single day, something veteran metals investors say almost never happens. Now analysts from major institutions like Bank of America are floating silver targets as high as $300 to $500, while Andy Schectman warns the paper silver system may be losing control. From tightening physical supply to collapsing confidence in paper ETFs, this could be the beginning of a massive repricing event that most investors still don't see coming.
I think for me, I look at a macro perspective of everything, and it's like seeing one tree and say, is that the reason? No, I take a step back and look at the forest and see all of the trees. And it's very frustrating to have a macro perspective because many of the things that we see are very counterintuitive to what we would expect. And that's called painting the tape too. That's exactly what the people who have been suppressing forever do. But again, it's getting harder to suppress when the metal is becoming harder to source and when the deliveries are becoming that much more pronounced. To be on the wrong side in a naked short right now is as silly as a mud wall. So, I think to expect the price to look, it's crazy to see the lead analyst for Bank of America, the lead metals analyst say $300 gold. Michael Oliver, silver. Michael Oliver, $300 to $500.
The summer.
Silver,
The summer.
Well, and Bank of America says by the end of the year, and their thesis is based upon the inversion of the silver to gold ratio. And today you saw gold did nothing and silver was up 7%. I never saw metal move above 2% the majority of my career. And GATA called it the 2% rule, the Gold Antitrust Action Committee, Bill Murphy, Chris Powell. It busted through that 2% and over tripled it. That is something that is very unusual in the entire 35 years I've been doing this.
I got to tell you, though, I think that part of their inability to hold it the way that they used to for the last, call it 20 years prior to 3 years ago or 4 years ago, pre-COVID, it's the viewers. It's the people that are online learning, watching, not just you, but all the various people out there that now starting to have a voice and making it much more known and so that it's not just, so oblivious to the powers that be. I think that the more people that have a voice, think about it. Before COVID, how many people were out there on YouTube channels doing, silver channels and letting everyone know, hey, you know what? COMEX has got to be rigged. Look, now you see, Bix and Road to Ruta. He's probably one of the smartest guys I know in that industry. But I think that the people out there, that the fact that you're becoming much more knowledgeable, I think is part and parcel of why they're not able to do it anytime. They're having a much more difficult time doing it now than they ever had beforehand.
When you see billionaire investors, spend nearly $1 billion on silver and say he made more money buying silver than he did selling his company at that level, those people are paying attention. When I saw he followed me on,
That's right.
on X, I couldn't believe it. And I have nothing to do with it, but it's the culmination of all of these people talking, because the reality of it is that the retail market really hasn't been behind this move. It's at a much higher level. But
Correct.
Yes, you wake more people up, and then you get the tailwind of massive retail, not only buying but understanding.
Yeah.
It becomes harder to suppress openly the market when everything points to a different direction.
Yeah. PJ Bolo wants to know if you think ready for this? The dumpling of ETFs is coming to an end.
The dumpling?
I think he means dumping of ETFs, but he wrote dumpling.
I don't know. I think they got some increase in flows recently. I'm not sure. I think ETFs are the worst way to own metal, period. Read the prospectus, pages 6 through 12, I want to say 6 through 9, titled Risk Factors in SLV and GLD. Not only can you never take possession of the metal, but you're paying close to a 50 basis point management fee to JP Morgan and to BlackRock.
And then what can you do instead of that?
You can store it physically in a BRICS facility for less money, and the storage expense is actually tax deductible. Buy the real thing, hold it yourself, take it out of. Once it's inside of the institutional vault from the ETF, the big players have the ability to stand for delivery of it through share redemption. You're playing right into the hands of the cartel that suppress it. When you realize that JP Morgan paid the largest fine the Justice Department ever passed out, and yet in the infinite wisdom of the regulators is allowed to be the custodian of the largest silver trust and one of the largest gold trusts in the world, it should tell you that is a rigged casino.
Yep. I didn't hear this today. SRK Services 1964 said, did you guys hear anything about the silver market tripping the breakers twice today?
Did not.
It wouldn't surprise on the upside. Right, the upside.
Twice on the downside. Sorry, it glitched.
Right, we glitched, and the backup air conditioning units didn't stop, so we had to shut down the COMEX. Listen, I didn't hear anything about it. It wouldn't surprise me that, yes, it tripped the breakers and maybe it halted trading. I don't know. I can't follow it per se. We watch the spot market, not necessarily the futures all day, every second of the day. But it wouldn't surprise me given the fact that they don't, that they would stop it on the upside, but they never do so on the downside. That's what we found. Rafi Farber had something, and this was before the move today, so I give him a lot of kudos. He wrote, silver liquidity is probably as low as it's going to get. Speculative positions are at a minimum. Open interest remains below 100,000. That means any small increase in speculative bullishness will move the price a lot higher, whereas any decrease hasn't seemed to move it at all. Price is $20 higher, 25% than the lows, and open interest is much lower than it was at the lows. A big move in price on a tiny move higher in speculative positioning is exactly what we've seen in that rectangle. It's about $10 on 2,100 contracts in open interest. That means if there's, and he wrote when there's, a sudden awakening in speculative fervor for silver and open interest jumps, say a reasonable amount like 115,000, the price should increase wildly, like $20 or even $30 in a day or two. This is completely realistic and is why he bought calls. So I know that you're on with Rafi quite frequently. I think he's great.
Smart guy.
Yeah, very smart guy, very good at the technicals. And I think today, like we said last week when we were here, we're going to wake up one day and we're going to see a big bump or a big jump. And today we saw it, and it was really part of an overall benign market. Gold did virtually nothing. Silver was up 7%. As I mentioned, gold was up maybe 1/3%. Platinum actually rode silver's coattails, was up 4 to 5%. And the overall market did nothing. I mean, it was really kind of a flattish day, with the exception of some of the, these crazy chip makers that are up. I mean, my God, I mean, if you look at SanDisk and Micron and some of these companies, they are up 100% in a week, 2 weeks. Intel, again, soared. That was up last week. We talked about it was up 117%. Now it's up about 125.
Crazy.
I don't think that it's a situation where Andy or myself would be getting out of all of our precious metals in its entirety, but there are reasons why you would perhaps get out of some. I mean, silver's at 300, 400, 500. From where we own silver, that is such an enormous return on our investment that to take a portion of that and put it into another hard asset, I don't think there's anything wrong with it. No.
Andy Schectman says silver's breakout wasn't caused by a single battery headline or retail hype. According to him, this move was technical, structural, and possibly historic. Silver surged 7% while gold barely moved, breaking what longtime traders called the 2% rule, where precious metals were rarely allowed to move aggressively higher in a single session. Schectman argues that for decades, paper markets like COMEX suppressed volatility through massive leverage and short positioning. But now something is changing. Physical silver is getting harder to source globally. Delivery demands are rising. Open interest remains historically low. And that combination creates a dangerously thin market where even small buying pressure can trigger explosive upside moves. Schectman points to billionaire investors quietly accumulating silver, while mainstream investors remain distracted by tech stocks and AI mania. He says the real money is repositioning before the crowd notices. He also warns investors about paper silver ETFs like SLV and GLD, arguing they give exposure to price, but not guaranteed access to physical metal. According to Schectman, during real market stress, paper claims and physical ownership may become two very different things. Another major signal is the breakdown in traditional market behavior. Gold stayed flat, stocks were mostly quiet, yet silver exploded higher and kept climbing even after hours. Schectman believes that suggests institutional resistance is weakening while physical demand tightens worldwide. He also highlights growing distrust in Western pricing systems. Countries and investors increasingly prefer physical settlement hubs like Shanghai, Singapore, and Dubai instead of relying on heavily leveraged paper exchanges. And perhaps the biggest warning sign? The US dollar itself. Schectman says if the DXY breaks key support levels, hard assets like silver could reprice violently as confidence in fiat currencies weakens. His message is simple. This isn't just about silver going higher. It's about a global shift away from synthetic paper markets toward real asset ownership.
Rick Roll just did it, silver to oil, and look what happened. But a lot of people, this guy owns silver for the right reason. I respect, right? It's legacy, pass it on, hold it. It's always part of your portfolio. A lot of people don't do it that way. A lot of people will say, what's my exit strategy? I'm going to sell this at some point. So, I mean, you have to be true to the whole community. And I think the tailwind is behind us handsomely. But if I felt that was going to change, I think I owe it to everyone who's spent any time listening to anything I say, for me, at least, to be true to myself and to the market. So I hope it's not for a while, but if I felt that things were drastically going to change, I'd be the first to admit it. Doesn't mean you need to sell everything, but maybe it's time to, just like your position in Micron, maybe it's time to lighten up and go elsewhere. I don't see that yet, but who knows what happens down the road.
No doubt about it. So, all right, moving on. Now we'll get to this one. Gentlemen, have you ever seen the market so obviously manipulated?
Yes, forever.
Every day. All day. That's just the way it is. I mean for right now.
How long ago Chris Powell of GATA said there are no free markets, just manipulations. The thing of it is, though, is that, the West has had the ability to manipulate freely without any ramifications. What's happening now is that they're being challenged through delivery. And that's the difference. When you have entities across the globe saying, there is an escape hatch, we're going to stand for delivery, it becomes much more difficult. That's when you see desperate attempts, drive-by shooting, glitches, circuit breakers freezing, air conditioning units overheating, or whatever. And you can sense we're getting closer to that moment where the manipulation is becoming harder for them to pull off. And now they're doing it right in your face. So to his point, it's just becoming more visible.
Do you think that I know that the new Silver Act is not really involved in the quote unquote manipulation of
or
these
maybe
things.
it is.
But do you think that will have, because the one thing I liked about it is now at least you're starting to get eyeballs. And even though I know it's really more so about locations of the vaults around the country, so that all the bullshit that they talk about with delivery and being concentrated in one part of the nation, so that it doesn't happen. But do you think maybe they'll start to look at the way COMEX does do the trading?
Well, they should. It's crazy that they haven't. The CFTC hasn't done a great job. With the new CFTC, maybe they will. Maybe they actually will, and much of the world sees it, and that's why part of the reason maybe you have a massively declining open interest. Maybe that's why you're seeing so much in the way of deliveries and actually loadouts and metal being shipped across the globe. The people who have had their chips here on the COMEX, many of them are cashing in and going elsewhere. That's what I would have always expected to see. One of these days it will become real, and you will see price setting move gradually and then suddenly to different parts of the globe, probably somewhere like Shanghai or Singapore, Dubai, countries that are largely cash and carry and have a vested interest in seeing real price settlement rather than Western suppression for the Western good. And it's becoming tougher to do so. I certainly drink my own Kool-Aid. I don't know where you put your money right now that allows you to sleep well at night. I don't, other than, other than what we talk about.
The crazy statistic that I read is that you see what's on my screen in blue. So since 1990, the U.S. M2 money supply grew from 9 billion to 23 trillion. Mm-hmm. On a per capita basis, that represents an increase of more than 540 times.
Right. Well,
that's just absolute insanity.
Right. And that's why when you see silver at these levels with an increase in the money supply of that much, it's never been allowed to find real price discovery. And that's why when you hear these wild moves that are being predicted, but no one says anything when Micron's up 150, 200% in the blink of an eye. But if it's silver, well, it's nuts. Well, it's because of price discovery and suppression on COMEX and open interest. It seems to be running away from that game. Maybe we're getting close to that moment where, price discovery becomes something that allows silver to find itself.
Before today, I had 4 bullet points that I wanted to bring up for what we would look for this week to see if, in fact, what we saw at the end of last week was real.
Yep.
Was this really start of something that could be considered another breakout?
What are those?
So one was the GSR, and it needed to break below 56.3.
We've got to be right there, aren't we?
We're there. We're done. We're below 55. Okay, so that's number one. Check it off the list because that was before today.
Yep.
The $83 level was a very big level because it hit 4 times and it had 3 rejections.
Mm-hmm.
So that was another one. We're through it. And then we were talking about breaking out for gold. There was this one hasn't happened yet, so at least it's one that we can bring up. A bull flag is forming. However, the breakout needs to be above 4,800 and then continue above 5,000. We're right now, gold's actually trading up in the aftermarket. So we're sitting right now at about 47.65 on the futures, which is, it's got a larger move in the aftermarket than it did all day today. And finally was the breakdown in the DXY.
It did get, I don't know what the dollar broke down to, but it was down.
It did. Yeah. The DXY is right now, it broke 98. It's at 97.90.
Yeah.
So those are the 4 things. And then 97 was really the first one that we needed to break. But the big one is 96. The 96 and the DXY is the big one to break. And I think once that happens, and I do think it will happen, when that happens, then I could say without question, this reversal and this is real.
You know what I find interesting? It's like sentiment got flushed, and you need to do that, I think, when sentiment gets too hot. Sentiment gets flushed, the price gets kneecapped, and China imports more silver than at any time in history. COMEX delivers more than at any time ever. The positioning from the weak hands to the strong hands, the lack of open interest to see these outsized moves, and how many people left in disgust and still don't believe it. And that's exactly what you want as an environment to see the price start to move, where again, it moved with no one noticing it last time. Everyone noticed it, so they got slapped. They left the party, and now it's quietly creeping up again. And you won't see any of this discussion in the mainstream at all. We notice it. You should all notice it, and we'll see if it follows through. It just did break through a falling trend line. It popped
cut through, man. This thing like a hot knife through butter. This thing, and I'll tell you the biggest for me, the biggest bullish indicator. Jim Cramer's not bullish.
Yeah, got it, dude.
There's no better contrarian indicator than him. That's it.
It's unbelievable.
I have to be worried when he actually likes silver and gold. That's what we have to be worried about.
The fact that he still has a job, it's unbelievable.
It really is crazy how almost everything that he says is opposite of what happens.
Yeah, he's entertaining. He's a good speaker and all, but he's wrong more than he's right. If he says he's out, that's usually when you would expect to see the price. He represents the mainstream. The mainstream doesn't get it.
Silver may still look quiet to the mainstream, but beneath the surface, the market structure appears to be changing fast. Physical demand is rising, paper leverage is being challenged, and institutional investors are starting to pay attention. If Andy Schectman is right, this could be the early stage of a major repricing cycle that catches most investors completely off guard. So the real question is, are we witnessing another temporary rally, or the moment the silver market finally breaks free from decades of suppression?